Hello, everybody. Welcome. Another week has passed. I can see everybody in the live chat. If you're in the live chat right now, give a quick shout out. Tell us where you're coming in from. And remember, you can use the live chat, but we'll be taking questions today on the Slido page, which we'll be sharing with you shortly. So today, just while we're waiting for everybody to arrive, I'll tell you what we're discussing. As usual, going to be half an hour normally with the main topic, and then we'll fit in as many questions as we can in the weekly live AMA. And today I'm going to be discussing my experience having been through Bitcoin crashes and the great Bitcoin crashes that I've been through, because I want everybody as prepared as possible for what comes next. So we're going to be discussing that today. Just before we jump into the topic, welcome everybody. I can see more people coming in from the live views. We've got Azad who will be moderating. He'll be picking out some of your questions. If you'd like to get your question answered today, we've already had a lot of people submit questions, but you can upvote other people's questions, or you can by heading over to sli.do. That's sli.do. No account needed. And just you can either scan that QR code, or you can use the link in either the description or the live chat if anybody's sharing that. Or you can ask your questions. Put in there, what is it, Azad? Hashtag SD7 today?
Yeah, it's SD7, and the QR code is on the screen as well. So I'm sharing the screen. People can see it. There's about 36 questions that have been upvoted. So scan the QR code with your phone or head over to Slido, sli.do, enter the code SD7.
Okay, so we'll just give another minute or so before everyone joins in. As a reminder, a few things. If you would like to get a copy, a completely free copy of the very first published book in the world to include Bitcoin that I wrote over a decade ago, Bank to the Future, Protect Your Future Before Governments Go Bust. We're giving away the digital copy because we want as many people to be up to scratch. Much of what was discussed in the book came true, and there's still many more forecasts to come through. So head over to retirementplanb.com/book. And you can also get the updated videos on the Great Depression of the 2020s that will be there when you register as well. For those of you that want the Mandarin copy, you can't get that one. You'd have to get that one from a Chinese bookstore or the equivalent in China. Here's the 4-part video series, retirementplanb.com. If you want to know how I'm investing right now, whatever happens with the Bitcoin crash or not, this goes through exactly what I'm doing right now. And that's a bunch of stuff for you. Also, congratulations to the Bank to the Future investors that are have exposure to Coinbase. The Coinbase IPO goes public today. What you can see on the screen right now is the Bank to the Future secondary market, where you can buy shares in companies through our special structure like Bitfinex, Kraken, Ripple Labs, Circle, blockchain.com, Shapeshift, Bitso, and many others. That's not open to US investors. If you are a US investor and you qualify as an accredited investor, then you can go into primary offerings where new companies go live on our platform. We've got companies like Celsius coming up, who have achieved incredible growth, and well done and congratulations to all those. The Coinbase IPO goes live today, and we look forward to seeing what happens there. So that's enough of the public announcements, I think. I think there's been a lot of speculation on the Bitcoin price leading up to the Coinbase IPO. It's a very, very big event for our industry. And so many people have been speculating on the impact of whether Bitcoin is going to initially lead the Coinbase price, or whether Coinbase is going to start leading the Bitcoin price. We'll start to see how that plays out in the coming weeks ahead. But always remember, traders are always the losers. It's always the investors that have won. I've been involved in this industry for over a decade now, and I have seen life-changing amounts of wealth achieved by investors. And I know traders that have been there in the highest performing asset class, and they ended up with the same amount of Bitcoin, if not less, than when they started in terms of value, and got themselves by over trading in sticky situations like trading, making a big gain, then the price crashed and they had to sell some of their Bitcoin to pay their tax bill, and all sorts of horrific situations that is only comes to the speculators and traders out there. The investors, you just need to figure out the tax efficient structures, sit back, relax, and watch the markets do its thing. Which really is why I want to prepare everybody for what comes next in Bitcoin. So personally, if you're new to this channel, then a bit of background. So I spoke at the very first Bitcoin conference in the world. Looks like the screen's freezing, but should be okay now. I spoke at the very first Bitcoin conference in the world. And when I spoke at that Bitcoin conference, the price of Bitcoin crashed from $30 to $3 during that week. That's a 90% correction in one day. I remember it very, very clearly. I also remember my $1,000 Bitcoin crashing to $250. I remember my $20,000 Bitcoin crashing to $3,000. And I fully expect, not financial advice, my $100,000 Bitcoin at some stage to crash to $20,000 to $30,000 at some stage too. So I want everybody ready for the next Bitcoin big crash, because the markets, while we might be maturing as a market with more and more institutional investors, remember, there are certain things that institutions and corporations bring with them that we haven't seen in the dynamics of the past. So while everybody will give you the bull case, I want you prepared for the bear case. And I want to also let you know why the bear market is, in fact, the most exciting time in Bitcoin for those that understand and know what they're doing. And no, this is not about me teaching you how to short the markets and time the markets and pick the top perfectly because you've done your trading and your technical analysis and the RSI and MACD are lining up and we're going through a descending wedge triangle. I've done all the trading stuff. I used to be a professional trader on the trading floor of the London Stock Exchange for alternative investment market stocks. And I know firsthand from experience that 90% of those people lose money at the expense of the 10% of insiders. And technical analysis just gives you a trading strategy that is normally combined with risk management and psychology. But most technical analysis, apart from giving you a framework, is useless at predicting the market. It's just a mechanism for taking the emotions of fear and greed and putting it into repeatable patterns. But those that try and pick the tops and the bottoms fail all the time. You might get it right once, you might get it right twice, but they'll never tell you about the times they get it wrong. And they're very rarely trading against it as well, because those people are the ones that always end up losing their. Most people, almost all of the people involved in crypto, they try to trade the Bitcoin, they try to pick the tops, they try to call the bottoms. They end up doing the exact opposite, especially the newbies of you out there. The newbies often say, I'm not getting involved in Bitcoin until they hit a capitulation point where it reaches close to what might be the all-time high of a cycle. And then they end up being on the wrong side of the crash because they had no long-term perspective. They had all sorts of fears in there. They listen to the news and they end up capitulating at the bottom and getting rid of a bunch of Bitcoin that then goes to the insiders and those that are manipulating the markets, because there's lots of price manipulation in the short term by insiders, and investors don't need to worry about any of that stuff. And just so we're clear, traders are those who try and make a quick buy by buying and selling, calling the top, calling the bottom, or picking their chunk out of the market. Investors are people that take a long-term perspective and ride out the markets. And so I'd like to give you the perspective of what I've done during these bear markets, because inevitably Bitcoin will go through, at the moment it's going through its hype cycle, but it will go through its FUD cycles, and it will scare the shit out of a lot of people. So expect it. And what will happen when Bitcoin Bitcoin starts crashing, new dynamics. So corporations and institutional investors are involved in Bitcoin on a scale that we've never seen before. But with longer term corporate and institutional investors, we do not know what their behavior will be when markets crash big time. Now, also remember, a lot of people have locked up their Bitcoin in loans, which means that when those loans get on the wrong side, so if you are lending your Bitcoin and you have collateralized, for example, maybe you've got 150% of the Bitcoin, and you've borrowed some of that Bitcoin or cryptocurrency or whatever it may be, then when the market crashes by over 50%, I say when because it inevitably does happen, then you get all of those people that end up having to sell their Bitcoin, even though they never wanted to, just simply because of the nature of the product and the collateral that we're in right now. That creates taxable events for those people that may have been borrowing. So if you are borrowing against your crypto, just something to be aware of, but that also creates some forced dynamics in the market where the crypto lending platforms may have to liquidate many of that collateral. Also, the difference in the markets that we're in now that we haven't been in before is institutional and corporations. And we're not sure at this stage, while everyone will tell you the bull case, and I believe in the bull case, I also want to give you the realism because I believe that there's power in being prepared so that you are unshakable about what comes next, because I've seen it many, many times. But here's the new dynamics. Institutions and corporations will have risk management strategies. And those risk management strategies will say that they may need to either rebalance their portfolio after a significant crash, and which means that they may end up buying the dips, or they may have a risk management strategy which forces them to liquidate that Bitcoin. And we don't know how they're going to behave because this may be their first bear market that they experience when it comes. Now, this isn't the video where I'm going to say on July the 36th, our technical indicator says that we're hitting into a falling wedge, and therefore everybody should sell when it hits this Fibonacci ratio based upon an Elliott wave analysis because the MACD and the RSI are going into some descending triangle. You can watch as many of those videos as you want, but they'll only encourage you to be a trader, create taxable events, get everything wrong, lose your shirt, and not be on the right side of the investment trend. And more importantly, take advantage of the bear markets. The bear markets are the most interesting time to be purchasing and investing in Bitcoin. So what do I do in bear markets? Well, I do nothing different in the bull market than what I do in the bear market. So when the great Bitcoin crash comes along, which I can't wait for, while everybody is depressed, while everybody is, getting rid of their Bitcoin, I'll be doing exactly the same, but by dollar cost averaging in and ignoring the price, you get to buy it all the way down at cheaper prices. Dollar cost averaging in a continual bull market is not a good strategy. You need corrections and you need crashes in order to accumulate more Bitcoin at the expense of the fudsters, at the people that don't have the strong hands, and the people that were just here to make a quick buck, listening to traders, listening to YouTube videos telling you when you need to buy, when you need to sell. The smart investors, the people that I know that are now billionaires, the people that have made life-changing amounts of wealth, they've accumulated during dips. Now, I don't even change how much I accumulate during Bitcoin crashes. Just stick to the same thing and you get cheaper and cheaper prices. If you try and increase it when your markets are going down or markets going up, you can do some interesting strategies around that. But I like just keep it simple. And that is when the Bitcoin crash comes, you got to get yourself in an environment where you are completely excited about it, like I have been after being through many of these Bitcoin bear market cycles. Now, I'm not saying that a crash is coming just around the corner, because it looks like you don't want to fight against the trend as well. And many people will be waiting saying, I'm not buying up here. but that is also just as dangerous as being scared of the bear markets. So we have a psychological belief, and I've seen it for over a decade now in Bitcoin, that everybody believes that they have missed the boat, that the price is too high. And every time you're involved in Bitcoin, when the price is reaching new all-time high, like we are experiencing right now, everybody feels the same emotion that the price is too high. What if I pick the top? I'll wait, and then they end up waiting and waiting, and then it crashes, and they say, "Oh, thank God I didn't buy. Actually, I'm a little bit fearful. Let me hold out and wait." And then it does one of the major crashes, which Bitcoin has done. Expect it, inevitable, predictable, guaranteed. Get ready for it. Get excited for it. When it comes, then people are like, "Oh, I'm glad I didn't buy that Bitcoin," and then they never end up buying it. When the price is high, it's too expensive for them. When the price is cheap, they're like, "Oh, thank God I didn't buy that. It probably was a Ponzi scheme, a currency just for drug dealers." And a scam anyway. So I'm glad I sat out. But if you look at the chart of Bitcoin, all I see is a 12-year bull market with incredible opportunities to accumulate Bitcoin at cheaper prices as the world discovers the value of owning your own money, spending your own money, and having a fixed money supply that is completely counter to the traditional financial sector of the world's largest Ponzi scheme that is called the dollar, the euro, the pound, the yen, and all the other fiat currencies. So, to get ready for the great Bitcoin crash, the opportunity to accumulate cheaper Bitcoins, and I know for a fact that 90% of the people that are watching this video are going to be bricking themselves and shitting themselves when the Bitcoin crash comes. And they're going to be saying, "Thank God I didn't buy at that stage." Or they're going to be looking at when they're selling. And there's a couple of reasons for that. The first one is they may be mixing their spending money with their investment capital. Investment capital should not be mixed with your spending money. Your spending money is about getting yourself in a position of security. And most people's spending money is their credit card. So they have negative security because the fact that the government wants you to go deep into debt in order to save the economy. And if you want to learn more about what the government and the banks want you to do, check out the video where I described how I'm selling all my Bitcoin that I let release on the 1st of April on this YouTube channel. But most people will be, will be scared, and they will be doing that. But the opportunity to accumulate at cheaper and cheaper rates is where the money is made for those thinking long term. And the utility, it's basic supply and demand. At the moment, the supply of Bitcoin is very, very small relative to how many people are trying to onboard and acquire some of that Bitcoin. So this is when everybody's trying to buy at the same time as everybody else. When you want to be, firstly, you don't want to change your strategy, not financial advice, but that's not what I do. I do the same thing in the bull market and same thing in the bear market so that I don't have to be at the mercy of trying to guess the tops and bottom, which is a losers and fools game. You want to be consistent throughout, but you get to buy a lot more Bitcoin when everybody is trying to sell it, when everybody is scared. And when nobody is realizing that there is value in owning your own money, spending your own money, and having that fixed supply. So the great Bitcoin crash is coming. I'm not going to tell you exactly when it is. I might have my opinions when it is, but the crypto market and the Bitcoin market tends to surprise people on many occasions. But utilize it for what it is. It is a manipulation normally from market insiders trying to squeeze out traders, some of the fundamental beliefs around people's desire to own their own money, spend their own money, and have a fixed supply, shifting and pushing the supply and demand in your favor. And so when the demand to sell is a lot greater, then it's a lot easier for you to suck up some of that supply. But I'm also not encouraging you to wait for that, because I've seen it so many times. And I've seen it when Bitcoin feels toppy. And I've seen people celebrate when Bitcoin hits $10, when Bitcoin hits $1. I've seen people celebrating. I've seen people celebrating when it's $1,000, $10,000, and I believe I'll be seeing people celebrating if and when it hits $100,000. I know that the past does not equal the future, but when I wrote this book, Bank to the Future, the very first book in the world to include Bitcoin, the whole premise of this was that I believed that investing in the future of finance, that the future of finance is going to look very different from the past. And investors need to position themselves for that. And those that did, that used Bank to the Future, that got exposure to companies like Coinbase, Kraken, Bitfinex, many of these other ones, that dollar cost average into their Bitcoin, that use some of the strategies that I taught on retirementplanb.com in the free 4-part video series. I give the strategy that I'm using in in video 3 of that. Those are the ones that have accumulated life-changing amount of wealth and are enjoying life and enjoy bear markets. So if there's one thing you get out of this video before we turn to the questions section, it's that my belief is try and get as many people prepared for what comes next. And if you can enjoy the bull markets are brilliant times in Bitcoin, but the bear markets are just as exciting. You get all of the people that were just here for quick money, they exit the game. The people that were meant to be here, they build life-changing disruption of financial innovation that disrupts every single aspect of traditional finance, one step at a time, to give you the opportunity to be involved in the exit of the traditional financial system as the world's largest regulated Ponzi scheme unfolds itself in the traditional fiat system. A lot of that is built during the bear market. And during the bear market is when it's the easiest and greatest time to position yourself in this industry. It's really difficult to onboard. For example, Bank to the Future right now, we've got almost a 2 to 3 week waiting list for accounts because people in the bull market, they're all trying to get involved, even though the wealth was accumulated in the bear market. But now in the bear market, you can get your account signed off within 48 hours. During the bull market, we're trying to hire like crazy to meet all the demand. And we got a 3-week waiting list for accounts. And that means some people miss deals, miss opportunities, because you want to be prepared for the bull market, not running around, flapping around like a headless chicken, trying to get your account signed up, trying to plan your tax, trying to get your structures right. Trying to be involved in all these things. You want to be prepared for that. So what is the point of this video and a final message before we start going through these questions? Number one, Bitcoin crash will come. It's inevitable, predictable, guaranteed. There's probably a lot further to go. Enjoy the ride, but it will come eventually. You want to get yourself as prepared as possible with a long-term investing strategy. Leave the traders to get wrecked, do what they do, and be manipulated by the insiders. And 3, get excited about the bear market. The bear market is when others are fearful and you can be unshakable and accumulating a life-changing amount of wealth, but make sure you're separating your spending money from your investment money so you can ride it out. You don't want to be one of those people that has to sell their Bitcoin to pay their rent, sell their Bitcoin on the wrong side of the market in order to pay some taxes or something in their next tax return because they didn't really plan this stuff out. And if you want more guidance on all that stuff, head over to retirementplanb.com, where you can get a free 4-part video series on exactly how I'm investing in this bull market, and it'll be exactly the same in the bear market. So if you enjoyed this content, do me a favor. We need more likes. We need more viewers. We need more people to be prepared for what comes next. There's people watching, scammers and all sorts of people with hundreds of thousands of views that are telling people to trade and here's the next coin that you should be buying, and all the things that get people in trouble that are getting hundreds of thousands of views. But we need the real information to be consumed by people, because I want more and more people prepared based upon cold, hard reality, and getting more and more people on the right side of this change. So do me a favor. I'm going to take a quick water break while we head over to the questions. Hit like, And Azad's showing you this, the button right now. Hit that subscribe button, hit the bell symbol, hit the all, and YouTube will give you a notification. And do me a favor, share, like. The more that likes we get on this, the more YouTube ranks us, and more people can be prepared for the great Bitcoin crash that inevitably comes. And people are excited for it, which is what I can't wait for. So I'm going to take a quick water break. Please hit that like button while I get some water, and then we're going to jump into your questions. Okay, what have we got on this board? How are we doing for time? 26 minutes. Okay, so we've got 35 minutes of as many questions as we can answer.
Okay, first question from Mauricio Rave. Will there be a 50% drop or more like 15% drop considering the amount of institutional money coming in?
Yes, I covered that one. If you didn't watch the beginning, institutions may need to rebalance. So there's just as likely to be a 50% crash as a 15% crash. And their risk management rules might require them to sell if there is a 50% crash. We don't know their rules, but I don't think it's not necessarily a given that just because institutions are involved, that we don't get the same level of corrections in the Bitcoin market. Be prepared for it, be excited about it. And make sure your accounts are all ready for the life-changing opportunity that comes from these corrections. 50%, no guarantees here. It can happen. I expect it to happen at some stage.
Question from Phil. Thinking of selling some Bitcoin to pay off mortgage. On one hand, with low interest rates and high inflation, it doesn't make sense to do that. But potential radical monetary reform worries me. Any thoughts on clearing all debt in current times?
Yeah, so I can't give individualized financial advice because in order to give, I have done my financial planning certificates. I used to be a qualified financial advisor, but at the moment, I'm the CEO of banktothefuture.com, and banktothefuture.com is non-advisory. So I'm not able to do that. And even if I was able to do that, I would need to sit down with you, get you to complete your assets, your liabilities, your cash flow, understand your upcoming needs, understand how you're covered, what insurance you have, what types of financial products you have. It would be in a position to be able to explore different financial products that could help you achieve your goal. But what can I tell you that is useful? I have something that's called a security bucket, and my security bucket is designed so that when we enter into the doomsday scenarios, let's say the entire banking system collapses, we enter into a 2008 doomsday scenario, we have a change in the global world reserve currency, gold gets confiscated at custodians, or the banks start exercising bail-ins, or Bitcoin held on loans all goes wrong, or some custodian, or whatever it may be. So my security bucket is designed so that I don't do stupid decisions during bear markets and during market changes. I want to be a consistent investor in my investment portfolio, and my security bucket is designed to give me security no matter what happens. It consists of cold, hard, physical gold. It consists of Bitcoin, where I own the private key. It consists of real estate property, my home, which I own outright without a mortgage. And it consists of good old fiat currency and several different hedges within that. So if you feel that you want to hold a percentage of your net worth in your security bucket, then one of the things we do at Retirement Plan B with our clients is we give them all the tools and the spreadsheets and everything. And then you can start to answer some of these questions based upon just having a sound financial plan that you put together for yourself. So I can't really give you, it's no generic advice, but if you feel that you want a high degree of security, then one of the decisions I made was buying my house outright. Now I know that Bitcoin, in my mind, in my forecast and projections, perform the value of my property and real estate, but it wasn't about an investment. It was about security. It was about feeling how I want to feel if we enter into a global pandemic. I don't have to answer to the bank. But, we will all end up being Bitcoin pizza guys. I've been Bitcoin pizza guy. For those of you that don't know the story, it's the guy that persuaded an agent of Papa John's Pizza to accept 10,000 Bitcoins for 2 pizzas. And they've now got $600 million pizza if they kept those Bitcoin all the way through. But we all end up in those scenarios. You can't win them all. It's all about what's right for you, putting together your financial plan. We're starting to consider later this year the second round of people that we're going to be enrolling. We enrolled 500 people onto our Retirement Plan B online coaching program. We're going to be preparing to enroll the next 500 people. But you need to register. We're completely oversubscribed at the moment. So head over to this page that you can see on the screen, which is retirementplanb.com/sign_up. Enter your name and email, and we will notify you as soon as we open for the next 500 people. We're still working, delivering additional bonuses, and really some amazing, some of the best people in the industry have agreed to be a part of it. And we're delivering some bonus modules for those. We got all the recordings, so we're starting to prepare for the next round. It'll probably be later, towards the second half, Q2, Q3 this year. But you can get all those details there. If you want to really take this seriously as a long-term investment horizon, start thinking about things like inheritance, financial planning, and tax, which is the topic of the day at the moment. As well, and being ready for those crashes. Of course, the next great Bitcoin crash is there. So next question, that's question 2.
Joanna asks, I have been in the space since 2013 and plan on selling some of my holdings. I'm now looking for income. Which areas do you think could still provide income? Example, multi-sig, stable coin lending, etc.
So lending so if you want to take some of yours, firstly, before you sell, make sure that you speak to your tax advisor in your jurisdiction, and you may decide that you're going through some kind of relocation strategy, and you might want to actually figure out some tax efficient planning for that. So make sure that you think about those before you actually sell. But of course, who cares about tax if you can't let tax make you make bad financial decisions, because at the end of the day, the tax planning could end up making you make a bad decision. Now, if it turns out that it's time for you to take some off the table, then remember, you've also got to start thinking about the tax side of investing. So you might decide to put some of it into stable coins, taxable event there. Think about the consequences and plan for that. You might decide to convert some of it into another cryptocurrency and take additional risk, taxable event. Think about that in your and how that impacts you. Or you might decide to actually implement a collateralized loan strategy where you just keep it, lock it up, take out a loan, and then start implementing some of the different strategies there. So the moral of the story is, when you sell, make sure you start thinking about the impact it will have and be prepared for that, because you end up creating a taxable event and you don't sell enough to cover your tax. And then you have tax day comes and you might be in the middle of that great Bitcoin crash. You could end up having to sell everything in order to cover it. Now, if you are following a risk-based approach and you want to diversify further, then I do lend some of my Bitcoin for yield, but it's an investment. You're exchanging one form of risk for another form of risk. You may be taking out, by doing a stable coin loan, some of the volatility or the exposure to the growth. And you might be getting a higher yield for that, and you get some stability. It's all about planning the different buckets and thinking about, what the goals are as you're thinking about here, and where you're going to be moving that. What is the exact consequences? These are the things that we really think through with Retirement Plan B customers to make sure that you're planning out these things before you make drastic moves. But there's all sorts of interesting innovation to receive yield. There's stable coins. There's loans that you can keep. With the staying in the crypto. or you can look at other types of traditional financial products. And I still hold a traditional portfolio so that I can benefit from the central banks moving us into what I don't want them to go into, but modern monetary theory, central bank digital currencies, debt-based Ponzi schemes, great resets, and all sorts of stuff that I think is coming. And you can either fight it, you can either fight against it, or you can position yourself so that whatever happens, you're ready for that. Next question.
Okay, question from Forrest Wolf. If SDRs become the asset backing for the new central banking digital currencies rather than, example, gold, this would put the global currency and financial power with the IMF. What would this mean for Bitcoin?
I think it perpetuates the demand for Bitcoin. So if we move into one world global currency, like special drawing rights is the overdraft facility that members of the International Monetary Fund countries can draw upon when they need to draw out some of those funds. Now, the IMF it creates those special drawing rights as money creation. So this is, in a sense, fractional reserve banking on a global scale, but people have to contribute set amounts of gold to participate in that. So there is a form of gold that is involved in that, but is mainly money creation. And if special drawing rights, we move to that, then I think the demand for owning your own money, spending your own money, and have a fixed supply increases if we have global coordination. I don't think that special drawing rights is likely to be the backing. I think it's more likely to be a basket of currencies, more like Facebook tried to achieve with project. And I think you'll see competing projects as well. But here's the one thing in common. They can globally coordinate in order to solve some of their debt issues and deleverage and move to a deleveraging form of money. But it doesn't necessarily mean that they'll have sound monetary policy. In fact, quite the opposite. So while the global can coordinate, and I'd expect reneging on those agreements during currency wars, so I think it's going to be very difficult to achieve with the special drawing rights. I think it's more likely to be a central bank digital currency built with algorithmic AI, surveillance, anti-money laundering built into the protocol, and really the disruption of banks and regulators in the process as regulations becomes automated, built into the protocol, and the central bank, and it becomes a deleveraging event for all the debt-based digital currency that currently exists, which is the debt-based dollar, the debt-based pound, and the debt-based euro that's created currently by the private banking sector, which is a more private form of money. So as you move from a more private form of money, which is where banks create it backed as debt, to a fully centralized form of money, which is what SDRs would be, or IMF, or central bank digital currencies, then I think the demand for money that you can own, money that you can spend, and money that has a fixed supply increases. And I think it will be interoperable, because I think many of these countries will look at the wealth effect that's been generated in Bitcoin and the crypto industry, and rather than going for an outright ban, look to collect the taxes on this asset class that's gone from nothing to $2 trillion and looks like it's heading higher before we get the next crash, the corrections, and hit new all-time highs. Obviously not financial advice, do your own research, but this is how I'm positioning myself. Next question.
Okay, question from Quinton. What are your views on DeFi, and which three areas in the traditional finance space do you see being disruption in a big way 3 to 5 years from now? Thank you for taking time to do these informative and interactive sessions.
Pleasure, Quinton. So in terms of DeFi, if you'd like more on this topic, I go back about 3, 4, 5 videos on my YouTube channel, and I talked about it. There was a video called "Is 2021 the Year of DeFi?" Now, DeFi, decentralized finance, for those of you not too familiar, is the concept of taking the middle person out of a financial transaction. And so I can connect my wallet, because I have the ability to own my own money, spend my own money, then you can actually connect with others that are looking through that through something called a smart contract. Now, these smart contracts are very, very risky. Unless you are a coder, then you don't know how to audit those. So over time, these DeFi smart contracts, they become stronger and stronger the more they stand the test of time. The challenge is that everything is innovation. So you need to take a risk-based approach here. You're exchanging one form of risk for another form of risk. You take out counterparty risk and you exchange it for smart contract risk. Now, I think DeFi is very, very important because I do believe that the answer to supporting, taking out the middle people having to be the policers of money is to take out the middle person. However, you need to understand that these products are very, very new, very, very innovative, and subject to all sorts of scams and challenges and then legitimate hacks and all sorts of attack vectors. So these are one of the risks that you need to be aware of. But at the same time, I think it's a really, really welcome innovation. I think it's great to see this kind of experimentation. You just need to be only playing with money that you are happy and can afford to lose. You'll never be happy losing it, but you can afford to lose it, and you go in with two eyes open. Now, one of the challenges with DeFi at the moment is that its main use case is circumventing know your customer requirements. I do believe that in the future, there will be a ginormous regulatory crackdown on the operators and the people that develop these smart contracts and the platform operators. And we've already seen it in the past with decentralized exchanges. And I do think that they will need to bake into the protocol. I don't think that kills DeFi. I think it just means that regulations get baked into those protocols. And so that's something that you need to be aware of. And when that crackdown comes, it's going to hit those products very, very hard. Many of them will get stopped out through the algorithms, and that will cause a perpetuation. We're recreating the financial system in the crypto space, but here's the difference. It's equity-based, it's collateral-based, but when you get those huge corrections, you start to see some of those rules of the DeFi contracts being enforced, and that can cause some incredible challenges in the DeFi space. In terms of products, it's great to be able to see lending, stable coins, these things are coming through. You're starting to see insurance and various other parts. I expect to see every single financial product be battle tested in the DeFi space as we enter more and more into the growth of the industry. And you'll also see the regulatory crackdown, which might be the start of one of the next cycles as well. Next question.
All right, question from Anonymous. It's been upvoted 11 times. Can we get a house tour one day, Simon? Big fan of your content.
My list, Dixon, is very privacy centric, and I don't think it's a good idea for operational security. Bit by bit, I've been revealing what Bliss allows me to reveal, but she's very privacy centric. I don't think we're going to see a Yo MTV crib style tour of the house. Thank you for the request, but yeah, it's not something I think I'm going to be able to persuade my better half to allow to happen.
Question from Giovanni. When Bitcoin will drop, the retrace will be 80% to 90% as the last cycle, or this cycle is different and it's more realistic, a 60% to 50% retrace. What's your opinion?
I could give you my opinion, and I could pull out a chart, and I could give you something that makes me look and sound very intelligent with Fibonacci ratios and Elliott wave analysis and technical analysis and retracement analysis and looking at historicals. But the reality is, I don't care. I don't give a shit. Sorry if that was your question, not trying to belittle it. But the reality is dollar cost average, investors win, traders lose. Don't try and call those tops. Don't try and call those bottoms. If you get a 90% correction, then grateful that you're able to buy into the bear market. The market will self-correct itself. We've been here before. We've done the 60%. We've done the 90%. There is arguments that I could give for both. But at the end of the day, it really doesn't matter as long as you're following an approach whereby you benefit from bull and bear markets, and then you can get excited for those. So sorry to belittle that, but I don't want to come up with something that tries to make me sound more intelligent, and I could give you that answer based upon a bunch of stars and moons and numbers on charts. There's plenty of other people that would do that for you and tell you, join and subscribe to my newsletter because I know the one coin that's going to go up in this, and I know the exact point, and you need to know exactly when to buy here and when to sell here. And by the way, subscribe to my newsletter in order to do that. I don't want to be one of those people. There's plenty of other people that will fulfill that need for you.
The newsletter salespeople, yeah, that's a good one. Right. So next question is from Lars. When and if the stock market crashes, Bitcoin will most likely follow. You think it's any chance that Bitcoin will not enter into a long-time bear market? Maybe it can break free of circumstances and get the life on its own that it deserves.
Bitcoin is a function of supply and demand economics, long-term. Short-term, pile of shit. It will crash with everything else. It's market manipulation. It's all the insiders. It's everything I talked about. The long-term fundamental value of Bitcoin is based upon supply and demand. The supply is known and will never change. The demand changes based upon people's perception of whether they need to own their own money, spend their own money, and whether they need to concern themselves with fixed supplies. So the stock market right now is led by quantitative easing and governments trying to get consumers deeper into debt and helicopter money and bailouts. So the QE and the stimulus is what's driving stock market at the moment. That also can stimulate Bitcoin markets, because as you create a wealth effect in the stock market, then some people will take a percentage of that and allocate it to Bitcoin and the crypto markets. But that's all short term. The fundamental value is the stock market is correlated to consumer debt, inflation, creating inflation, and people trying to beat inflation by allocating to stock markets, and rich poor divide, where the central banks make those who own assets incredibly wealthy through quantitative and stimulus, and make the rich poor divide greater and greater and greater. Bitcoin is correlated to that. Now, those two things can happen at the same time, like you are experiencing right now. You might have the rich poor divide increasing through asset price stimulation. You might get stimulus packages designed at getting consumers deeper into debt, which pushes up stock markets. And then you might get the demand for money that you can own, money that you can spend, and money that's had a fixed supply going at the same time. And short term, you might get those corrections that move together. But if you look at Bitcoin, one of the first big use cases was people understanding through bail-ins that they needed Bitcoin. People understanding through censorship of money when they were contributing to legitimate organizations like WikiLeaks, that you get censorship of money. People understanding when all this money is being created and you get inflation effects, like we're being announcements right now that central banks call a blip in the road, but is causing that makes people realize that the desire to have fixed supply. So when people realize that, you get that's what drives the demand for Bitcoin, not the stock market. They may move in tandem, but the real long-term fundamentals is what drives that. Next question.
Question from Anonymous. With a looming market crash, would you recommend US dollars from stocks and mutual funds to the sidelines in cash?
So I firstly wouldn't recommend anybody trying to time the market and sell their Bitcoin prior to a crash, but I can't give you that advice. You have to do your own research and make your own decisions there. I recommend dollar cost averaging in, rather than taking some of your fixed supply, money that you can own, money that you can spend, and exchanging it for toilet roll that you can't own, that you can't spend, that lives on a bank's balance sheet, that is backed by debt, and who could be dialed away in order to do that, unless it's part of your security bucket. And your security bucket needs to be planned very carefully to secure you from different scenarios. So I rewind a little bit, and I covered that question of some of the things that I think about with that allocation. So again, this is about you putting together a plan, protecting for different eventualities. And if you want to protect, for example, from banks, bank bail-ins, then you don't hold your money in dollars. You might hold it in a stable coin backed by a trust, or you might put it in treasuries so that you don't have the counterparty risk of the banks. It's about understanding the different risks, putting together a plan based upon different scenarios, which is what I try to deconstruct for people in the third video on retirementplanb.com, rather than just trying to pick the tops, trying to pick the bottoms, putting everything into one thing and then being exposed to one risk. It's about risk management, people.
Okay, we've got about 9 minutes left. Should we do a quick rapid round?
Okay.
All right. Next question from Anonymous. Should we go all in on the Coinbase IPO? And if so, when exactly?
Can't give you financial advice, but no, you should not go all in on anything. It's about protecting yourself, diversifying, and not putting yourself in a position where your entire wealth is gambled on one outcome. That's called gambling, people. If you want to gamble, then expect the results of gamblers, which is they always lose. The house wins.
Question from Boris Sturgeon. Could a global corporate tax have an impact, positive and or negative, on the crypto space?
A global corporate tax, why would that impact the crypto space? Corporates, that would just affect all corporations equally. And so if you're talking about a global Bitcoin tax or a global, I don't see the correlation there between that, unless you're holding Bitcoin in a corporation and is subject to a greater tax there. I'm not seeing any relationship there.
Question from Anonymous. Where can I buy Coinbase before it goes public?
You could have bought it on banktothefuture.com, but we're now too late because it goes public today.
Question from Mr. Z. The majority of Bitcoin miners are based in China. I read this allows the country to attack Bitcoin and discredit it via coordinated mass mining sabotage. Could this be feasible? Asking for a friend.
So what they're referring to, and I covered this with Andreas Antonopoulos in a video called Don't Buy Bitcoin, where we went through these different scenarios. But what they're referring to is there is a percentage of mining farms that are located and they go wherever the cheapest electricity is. I've invested in several mining companies and I was mining Bitcoin. Whoa, I was mining Bitcoin and so excited I knocked my glasses off. In 2013, in Iceland, because Iceland had there. So whatever has an edge, if Bitcoin turns out that the edge moves away from China, then a lot of the hash power will relocate. Many have invested in it will just go wherever the most efficient and the greatest environment to mine Bitcoin is. And it is fully transportable. Hash power can be relocated at the flick of a switch. Markets change, dynamics change. Now, what they're also referring to is the geographical location of some of the companies that set up mining pools, which are most of these mining farms and mining pools are crowdfunded with people all around the world that are contributing to those. And just because they happen to be, so nobody actually really knows. We just know, having been to China many times and visited many mining farms, that there are certain entrepreneurs that have set up mining farms that are located in China. And the innovation right now is that you can take big mining rigs, you can transport those in cooled, locations that are in condensed, don't even know what I'm trying to say, boxes and things. And I've been investing in many companies that are actually providing this innovation to allow Bitcoin mining to be fully transportable. And it is a pure free market, baby. It will go wherever the most efficient terms are. And so if China starts cracking down, a big chunk of that hash power will be shut down and it will be immediately correct the opportunities for miners to make profits, relocate in other places, and geographical diversification is good. This has been factored into the model. So it's not something I concern myself with too much. But is there a theoretical scenario where they can simultaneously, the Chinese government, for example, take on all the Bitcoin mining rigs and try and perform a 51% tax and take down Bitcoin? There is a percentage of a percentage of a percentage chance, which is what drives some of the risk premium that people that invest in Bitcoin can grow from. Because while everyone else is scared of that, many other people will be like, oh, I'm not getting involved because of that thing, that little thing. There is a risk that things like this can certainly happen, but the ingenuity of the Bitcoin ecosystem to adjust, and I know this was meant to be a rapid fire, so this will be the last question, has proven time and time again and again. If you want to wait till when Bitcoin is a unit of account, meaning of exchange, and it acts more like gold, where it just preserves your wealth rather than generates wealth, then you have to wait for all of these risks to be fully known, everyone to understand what may happen. And then you might as well have just put it in gold at that stage. So those are the theoretical examples, but find more on that video. So I think that's all time we got right now. I think we're coming to the end. Oh, I think we got time. We got 4 more minutes. We can do another question.
We got 4 more minutes, but before we get to the 2 last questions, just a quick one. You can follow Simon. For those of you who are on Telegram, there's a Telegram group. You literally go to Simon Dixon channel, and you can find that. And also, Simon, if you wouldn't mind, how is it? You're now in the halfway mark, isn't it?
45 days into my public commitment to health. I've worked out each and every day for the last 45 days. And those that follow me on Twitter at Simon Dixon Twit, I answer 1 question a day, short form content, normally less than 5 minutes. You know me, sometimes I go off on one and overspeak. Can't help but driving out a 10-minute one every now and then. But I've been doing this completely self-interest. I want you on Twitter to hold me completely accountable. If I don't check in each day, I'm going to be doing this each day. If I don't check in each and every day, then you hold me accountable. And I will check in on Twitter and I'll give you that. That's the gym. I gave a bit of tour of the gym for those that were interested in that. Follow me at Simon Dixon Twit. Beware impersonators. There's obviously a million people with very few followers are going to pretend to be me, and on Telegram and all these places, and on YouTube in the comment section. There's going to be a pretend Simon Dixon that's going to ask you to sign up to some scam, that's going to ask you to send them some Bitcoin or Ethereum. Beware impersonators. I ain't never going to do that. I'm not going to private message you on Twitter or Telegram or YouTube in the comments asking you to send me some money or be involved in some trading scheme or sign up for some newsletter or anything like that. Just wait to hear it from the mouth itself. But on Twitter, yeah, I've been checking in every day. 45 days in, the stomach's going down. The tits are starting to look a bit more like pecs. The energy level is starting to increase. So really happy with the accountability that you've been putting me through. And in the next 45 days, I want to be looking a lot better, but really looking great. This is about energy level. I believe that I want to be able to deliver this message to you with a lot more energy. And I'm already starting to feel that as a result of my public commitment to health. So I'll keep checking in, and I've got to get through those 90 days. The whole purpose of this is I believe that if you do something consistently for 90 days every day, it becomes an addiction. So I'm trying to train myself to get back into health after a decade of abuse since discovering Bitcoin, since founding banktothefuture.com. It's not been good for my health, but time to turn that around, people. So thank you all for doing that. The Telegram group, you can, if you're into Telegram, there's an announcement channel, and you'll get an announcement each and every time so you don't miss updates. All right, so I think that's going to do it now for this week. Always remember, if you haven't liked this video yet, if you enjoyed it, do me that favor. We're in this together. We're trying to get more and more people to view these videos. Share it if your family member is scared shitless of the great Bitcoin crash. or they're not into Bitcoin yet and they're procrastinating because they think that they've missed the boat, then chuck them this video. And I'd love to support them through that journey, because always remember, you are alive at one of the most interesting and exciting time in financial history. Many are going to get hurt. Others are going to do incredibly well. And I want you, your friends, your family, your loved ones, and other people to be on the right side of that change. Peace.